anybody that approaches you that's new or anybody that's currently in your practice, I think this needs to be a conversation that's had, and to confirm that they didn't do these filings without discussing with you, and that you get a sense of what's going on, because these tax professionals are experiencing where a client didn't realize that this really impacts their income tax situation. They thought it was just a COVID program. They signed a couple of forms. They didn't realize that this plays into the rest of their tax situation. And so the tax professional wasn't consulted on it because the person just thought, oh, this is like a PPP or like another program. They're telling me I'm eligible for this. Certainly if I wasn't, then the government wouldn't pay it out. Hint, hint, it doesn't work like that.
Hi, this is Christian Jones, and you're listening to the ProMarketer podcast. Whether you're in the tax compliance space, resolution, accounting, whatever slice of our crazy industry that you're a part of, the goal of the ProMarketer podcast is to bring you strategies and tools to help you build your practice like a pro. And so we brought a lot of fun guests on this podcast, and we are not having any exception today. We've got Catherine Tindall. Catherine, thanks for joining us. I'll let you say hi.
Yeah, thanks for having me. This is going to be a fun conversation.
Absolutely. I'm really looking forward to this. I think this conversation in particular is super timely. If you're a tax or accounting professional and don't know about ERC stuff related to resolution work, that's what we're going to get into today. But a little more about Catherine before we jump straight in. She owns and runs Dominion Enterprise Services, which is a specialty CPA firm, works with other practitioners. So she serves in a B2B setting most of the time, complex incentives and credits and IRS resolution work specifically around ERC. And so we're going to talk about some of the ways that ERC, if you don't know, got messed up through the launch and is now being cleaned up by people like Catherine. She is here to help folks just like you, clients of TaxProMarketer, people that follow our podcast, our network. If you have clients who own businesses and have ERC stuff on the books, this is going to be really timely, I think. And so Catherine, with that, again, thanks for joining us. And let's talk origin story to start. Give us the rails that you ran on to get to this place of being an ERC specialist. How did you get to this point?
So for us, my background is just in income tax work, doing a lot of like strategic tax planning for closely held businesses. And during the pandemic, when this program originally came out, we realized, reading the guidance of it, that it was just really messy and that it was going to be a prime target for IRS audits. Just the way that the legislation was written, the way that the IRS guidance came out, and then the way that you apply for the credits just allowed for a lot of bad actors potentially and a lot of issues with the IRS, which over the course of the program, we have completely seen that. All my predictions around what was going to happen have basically come true. And so early on, we realized, okay, either we need to master this and be experts at it, or we need to find somebody else who's an expert at it, because these tax credits, you're playing life and death with such high figures, even for small businesses, because of just how quickly they can rack up depending on the situation.
Right.
That it's not something you can just tread into lightly.
Right.
So we started doing them for our own clients. I was friendly with other practitioners who didn't want to touch the program, understandably. So we started working for other CPA firms doing this kind of work for their clients, reviewing cases that had been done by maybe payroll providers or people who weren't experienced in the income tax side of things. And so we came in and started doing that kind of work. And then I got really interested in the education piece and started teaching on CPA Academy. And we did some courses for Intuit and things like that, just because there wasn't a lot of good information out to the tax profession about a lot of the red flags in the program and a lot of the specifics. I think it was easy to find a lot of the general guidance, but to find the real nitty-gritty rules was hard for a lot of people, especially if they didn't want to sort through hundreds of pages of IRS guidance to get to the meat of it for what they needed to know for their clients. So that was our journey with it. And now we're in the second phase of things where the IRS enforcement is starting to happen. The IRS is really scrutinizing the program. And also people who have done filings and maybe didn't talk to their tax professional, the tax professionals are now realizing, oh, I have this client who did this program. Yeah. Right. And it doesn't smell right. What do I do? So that's really what we're getting involved with now, is just helping people get back into a compliant position with the IRS, support positions that were taken with the documentation that the IRS needs, and helping people substantiate claims or correct claims, because sometimes you have companies that are eligible for something, but maybe not everything that was filed for. And so getting them back into that compliance with the rules is where we fit.
Let's highlight something you just said just before we go on too much further. Catherine is, if you're not aware, on CPA Academy, on Earmark as well. Is that right?
Yep. Yep.
And is talking in other forums. And so if you haven't heard of Catherine, I think like a few other things that are making their way down the pipeline right now, post-COVID stuff, or maybe you could throw BOI into that as well. As the year goes on, I think we're going to have more people looking for voices like Catherine's to be like, oh, dear God, tell me what to do. What do I do here? And so again, we're so glad to have you, but let's get into, I've got a couple of questions here. You hit on a few of them, but without giving away your special sauce, as my camera makes me look like I'm in a shadow again. So sorry, folks, if you're seeing me. I don't know what's going on, but common errors. Tell me what you're commonly seeing for people around the ERC program. What are people missing or missed that you're coming in and saying, again, like we're establishing either the basis of the way things were done or we're making kind of corrections? Like what? Talk more about that. What are you guys bumping into?
Yeah, I would say the most common, it just depends if the person has or hasn't filed yet. So if somebody has not filed, only the 2021 program is open at this time. And the easiest way you're going to be able to tell if they qualify is the revenue rules changed for the program to make it a lot easier. You can visit either, I'm sure it'll be in the show notes, our website, or we can just provide the tools directly. But there's some tools that I've put together for, how do you do some of this initial revenue testing? Because we're looking at 20% revenue declines quarter by quarter, starting in the fourth quarter of 20 all the way to the third quarter of 21 compared to 2019. So that's the first piece, is you got to look at those the revenue testing. And then the second piece is you got to look at, did they have government restrictions in their operations that were pretty significant? So not just, we had to wear masks, or you're looking for things that were fairly significant. And there's a definite breadcrumb trail that you need to have with very specific hoops you have to jump through for it. But that's the first piece that you look at, is having that conversation with the client if they haven't done the filing. And then 2021 is the year that you can go for. Now, if somebody has already done a filing, how do we know whether or not it's passed the sniff test? Another longer tool that I developed for tax professionals is a due diligence checklist that goes through a lot of the major issues that I see. And something that I do want to highlight is that the IRS previously, from the Office of Professional Responsibility, has pushed out to the tax profession that it's a due diligence requirement on our part, because you may not be aware that when people file for these credits, you also have to file amended income tax returns. And that usually goes to the existing tax professional to do that part of it, because whoever was doing the credit filings is not usually the tax professional. For people where it's the tax professional discovering this. And so when you go to file those amended returns, if you're not comfortable with the actual credits that the client got, or it seems a little off, or you weren't involved in the process at all, you do have to do some due diligence. The IRS is pushing back on that you need to do some due diligence. And so I made a checklist for that. But the high level things that most, biggest red flags that I see from claims typically is, look at the person who did the filing. Was it a salesperson, or was it another CPA firm, or a reputable looking outfit? What was filed for and how was it determined? So if the client had significant revenue declines in 20 and 21, and you can obviously see it, and they were obviously impacted, that's going to be more likely. But if you have somebody where the reason that the company thought that the client was eligible was because of government restrictions, but they don't have things like government orders, or it's just very vague, or maybe just the client filled out a checklist and there wasn't really it should have felt hard. When you apply for this credit, it shouldn't feel easy. It should feel hard, especially when qualifying under government orders. And so those are questions to have. But I'd recommend, just if you're dealing with this as a practitioner, looking at that due diligence checklist that we can provide, because there's a lot of things that people tend to miss, but you can just tell if it smells off. And then another common one that I see too is that there were a lot of payroll providers that were offering this as a service. And they basically would just have the clients fill out a checklist and then do a submittal just based on that. Very often those are incorrect and there wasn't enough due diligence done. So you just have to take a look at what the credit was, what the nature of the client situation was. And I'd say if it doesn't smell really good on the face of it, you need to do some more digging and get to the bottom of what's going on there, because the interest and penalties on an IRS clawback on these just can be astronomical. It can be a nightmare situation.
Without divulging the names of the innocent, those that you are working with, can you give us an example, like a horror story? What's the worst case you've seen, or one of the worser, if that's not a word, the cases that have had stiff penalties and interest associated with them, just so we can make sure, if people aren't paying attention yet, what types of cases are we potentially staring down the barrel of from the IRS with cases like this?
Yeah, it all depends on what the situation is, but I can just give you an example of a claim. Like we saw one where a mill was trying to claim 1.2 million for an organization under a supply chain disruptions, that's also just a huge red flag. Most people almost impossible to qualify under supply chain disruptions just because of the way the guidance is written. It's really tough. So they were trying to use a supply chain disruption for this organization. And when we went back and did the actual due diligence required, the client only actually qualified for $200,000. So it was like $1 million off. And this wasn't a huge organization. And we were able to fix it ahead of time. But if that was the biggest one where, if this had gone wrong, they would have gotten these funds. They would have probably spent down these funds. It was a nonprofit. And then the IRS comes back a couple years later, because one of the biggest issues in this program that I think people don't maybe appreciate is that there's such a long feedback loop between when you do filings and when the IRS gets involved. And only recently, back in September, when they started the filing moratorium where they're no longer processing, they're waiting to get a game plan so that they can start processing again. But they didn't really do much due diligence on claims before paying them out, because we have a voluntary tax system. And so they would just pay out these big claims with the understanding of, oh, you taxpayer who have applied for this, you're certifying when you sign these returns that you've done all the work, that you've figured out that you're eligible for it, and it's your word saying this, so we're just going to pay you for it. And so it takes a really long time for the IRS to correct that feedback loop. And that's why there were so many bad actors in this space that were just unchecked, because the IRS is almost operating like a little farm stand with an honor box for the Treasury. And like, people take advantage of it. And that's what we've seen. People just go crazy with it.
And with all the things that happened during COVID, obviously, this is one of a few programs that obviously got abused, but this is one of them that is going to get scrutiny on the back end, whereas some of those first rounds of PPP are going to be just, hey, whatever, we're just going to look the other way. We're not going to come back and address those. And I know the second and third and other rounds will, but it does feel like this is one of those programs that got lumped in with a lot of others where it just felt like free money. And here comes the piper you have to pay. Okay, so let's talk about just, again, like value add for a firm that is helping clients in your positioning. Like, how do you think about that? How would you engage with clients? Maybe they're new clients. Maybe you don't know what they did with ERC and they weren't on your list of current clients back when this happened. But give us if I'm a CPA or I'm an accountant, or I've got clients that maybe this applies to their business, maybe it's your checklist, maybe it's something else. Talk about the positioning to the clients, the value to the clients, things that you would want them to have in their mind as they're listening to you as an expert, that you do this work and you can maybe help them with this work, right? But let's talk more about how you would frame that.
Yeah, I would say because I'm a regular income tax professional myself. And so these were conversations that I was having with clients, but anybody that approaches you that's new, or anybody that's currently in your practice, I think this needs to be a conversation that's had, and to confirm that they didn't do these filings without discussing with you, and that you get a sense of what's going on. Because a lot of the time, there are quite a few people that I've experienced where my relationships tend to be with the other tax professional, but these tax professionals are experiencing where a client didn't realize that this really impacts their income tax situation. They thought it was just a COVID program. They signed a couple of forms. They didn't realize that this plays into the rest of their tax situation. And so the tax professional wasn't consulted on it, because the person just thought, oh, this is like a PPP or like another program. They're telling me I'm eligible for this. Certainly if I wasn't, then the government wouldn't pay it out. Hint, hint, it doesn't work like that. And so for the tax professional really to come in and ask clients, did you do this program? And then if they did, get more information about it. And then if they didn't do the program, then you don't have too much to worry about, other than if they haven't had an assessment done for it and they do qualify for it, which, since it's only the 2021 program year that's still open, it's more likely going to be qualification under revenue declines, which is a very easy test to do. We've got a tool that you can plug in the revenue numbers and see if it makes sense for them to get a full assessment. But that's the conversation you want to queue up. And really, I think when having these conversations with the clients, a lot of them may have spent the money already, and to just let them know what their exposure is. Ultimately, at the end of the day, it's up to the client. We as tax professionals can only bring the horse to water when it comes to getting people back into compliance. But I did a calculation out of, I think it was a claim. Let's say you had a claim that was $100,000 claim. And then by the time you have to pay for a CPA firm to represent you in the audit, the IRS disallows the claim. They charge underpayment of payroll tax penalties, a whole host of other things. You can also get whipsawed on your income tax adjustment. You could end up being out more than you'll be out your credit, and then out like another $50,000. Like you'll lose the money that you got that you may have already spent, and then you're going to have to accrue all these other fees on top of it. And it can end up you're way farther in the hole. Yeah. Instead of you just shouldn't have touched it in the first place.
Now, how's the IRS handling cases that you're amending right ahead of time? Like in terms of mistakes were made. Hey, let's get this stuff refiled either on the business side, the personal side, or both. What are you finding their response to that to be?
For a lot of them, it's just so slow that we're not even really being able to fully resolve them yet, because they're so behind on the processing. And so what happens is if somebody has a bad filing, they got paid out the money. Basically, what you want to do as soon as you can is get those returns re-amended for the correct amounts, have the client pay back the additional funds. The IRS does keep flirting with, they had a voluntary disclosure program where you only had to pay back a portion, 80% of the funds, and that program ended back in March. There's talk that they might open it back up again. If I had a client and they were in this situation where they had an erroneous filing that we needed to correct, I wouldn't hold my breath on another voluntary disclosure program in order to try to save them some money. Like you just want to get it corrected as soon as possible, because we don't know if that's going to happen. Worse, you don't want them to get selected for inspection and then they knew they should have corrected it and they didn't. Like, you just want to get trued up as soon as possible. But so far, I haven't seen them be really aggressive on the penalties side yet, but I think we're just not far enough along in the timeline, because even on the inspection side of it, they're really just getting started. It took them a very long time to get personnel in that are trained up well enough to be able to do these audits. And they're still, from my conversations with a lot of other tax attorneys, the agents that are involved in this program are still going through a lot of training hiccups, and I guess to put it mildly. And so I think it's really just going to be over the course of this summer, we're going to start to see some intense audits pick up and a lot of disallowed credits. And I think they're going to focus a lot on claims that are not yet processed as well, but also some of the larger ticket ones. And as they start to collect more names of the bad actors and client lists, they're going to be running down the list of everybody that filed with certain bad actors. And it's going to be a lot of mess once it picks up.
So maybe even what you're saying here is specific sources. So your payroll companies that just had a simple program, obviously other more nefarious bad actors. So you think that they're going to start to pick on anyone and everyone that came through certain channels that hit certain markers. So if it was your payroll company that just had quick, simple form and here's your money, right? You think those will be the first to get under the microscope?
Yeah, I think that's where they're putting their emphasis, because with the voluntary disclosure program, the whole third part of it was basically explaining who was the person that did these filings, how did they promote this, what's their address, what's their name, like any information about them. And what I've been hearing from other people is that IRS criminal investigations agents are like actually going and starting to visit people who were part of who did the voluntary disclosures to get more information about some of these bad actors. So I think we're going to see that kind of approach. I think that's the only reasonable approach that they can really take at this point, because if you have one practitioner who's taking a bad stance on one claim, they're probably taking that same bad stance on all of their claims. If they're just being very aggressive and ignoring the basic rules of the program, they're going to be doing that for everybody that they filed for. So I think that's the approach that they're going to be taking, which makes sense to me, just because of when you do these filings for this credit, there's so little information that's actually submitted to the IRS in the original claim filing process. Like a couple of page return, a couple number adjustments. That's all they're actually asking us for in the initial submittals, which is insane. It gives them nothing to do very much audit sampling on. And so they're going to have to rely on trying to find the bad actors and then also doing some basic analytics around general qualification things. But they don't have the information on the returns to make those good picks. So it's difficult for them.
And if I heard you right earlier, we're only reviewing 2021 at this point. So we've got in the preceding years, 2022, 2023, 2024. Those years are just going to, if I'm hearing you right, bring their own avalanche of more scrutiny to all these different actors or cases. And so if you've got claims that have been filed either in multiple years or in 1 year, is it fair to say that this is just a growing and developing area that people are going to have to be aware of for the coming 2 to 3 years?
Yeah, for IRS enforcement, absolutely. I think what's going to happen is, so the program itself ended
Right.
for most companies Q3 21, but you have a current statute of limitations. If there's fraud allegations there, it goes even longer. In recent tax bills, there have been proposals to extend the statute of limitations for
Right.
extending it up to 6 years for inspection. So I think this is something where if you're a tax professional or if you're a bookkeeper or an auditor listening to this and you're encountering an ERC claim that is either pending or has already been processed, it's something that you just want to get it buttoned up now. We're seeing too on some of these IDRs, which is the first documents that you get over from the IRS when they're going to do an inspection. They send over these information document requests. They're not giving a ton of time to assemble all this information of the main things that they're looking for. And so if you don't have those files ready and you haven't done that due diligence, if you see, oh, my client went with their payroll provider, but all we have is copies of these amended payroll tax returns and there's not really much else here, recreating those substantiating documentation files now before it becomes a problem, especially for larger claims or where it can be just higher exposure claims. Like that's where I would start as a tax practitioner, is really trying to prevent people from really having the claim blow up on them a year from now if the IRS shows up.
Right. So let's put on the hat of, now I am a CPA or a tax preparer and I'm hearing this and I want to get your help. How do we engage? What do you bring to the table if you're going to come in and be in more of a B2B role with my business, my clients? Do I bring you just a list of people that I think are going to qualify, whether I know they are filed or I think they might be? How do you engage with me? And then how do you engage at all with kind of the B2C, the customer?
Yeah, so basically what we do is it starts off with a conversation of, so what happened? It's a diagnosis process of, okay, what happened? Have they already been paid these funds? No, yes. What are our options? How do we get this cleaned up? Are they under inspection? Yes, no. And basically my goal at the end of the day is to get the credit correct again. And so if it was I have people that come to me where they think they want more of the support and then we redo the work and find out they were eligible for more. I've had that happen too. Yeah, which that's a much nicer conversation than, hey, you actually have to pay back this whole thing. You really don't qualify for this. But basically what we do with the other practitioners is figure out what happened in a specific case and then what's going to be involved to get it back to being correct. Or if it is correct, how defensible is it going to be in audit? Do you have everything? How do you collect those documents? Because a big key component for a lot of these claims are government orders, and those can be hard to source. So we have access to databases of that information and are able to pull together the supporting documentation for those situations that a normal tax practitioner probably doesn't have access to, those kinds of tools and resources. So that's where we can come in. And it's really a custom engagement because it depends on what the client needs. I have some people where we can just tell immediately, no, you didn't qualify for this program, but the IRS also hasn't processed this yet. So it's as simple as filing for a withdrawal. And that's a pretty easy situation. You have others where actually we need to redo all these filings and we need to crunch all of your payroll data again because these allocations aren't right. So it just depends, but it's at the end of the day, it's like a Goldilocks situation, right? Like it's better to have too little, honestly, but you don't want to have too much. You want to have it just right and then have all your paperwork lined up so that you just don't have anything to worry about from an audit perspective if you've, done all your due diligence.
In those audits, it feels like with the penalties and interest and things that you're articulating and how long that feedback loop is and how much time can have transpired before you even have an idea, this feels like it could be for most small businesses, that's fairly devastating. That's a fairly devastating letter to get. And so to not only keep your clients in good standing, but also keep your clients at all, I feel like, do you have the anticipation that this could shutter a lot of businesses that get these letters of like, hey, looking into things and this ERC kind of claim you made does not pass muster? I feel like, is that
Yeah.
maybe too strong that you feel like this is maybe going to shut down a decent amount of businesses?
I don't think necessarily it's going to shut down, because at the end of the day, if the business can't pay back the money, there are ways that you can do like an offer and compromise and things like that with the IRS. They're not going to try to kill your business over this. You definitely, if you're getting into a situation like that, you need to hire some professional experienced help, because once you get into the process of negotiating these kinds of things with the IRS, you need somebody who knows how to deal with the process.
Right.
But I don't think they're going to be really putting the hammer down on businesses where they would force you to shut your doors down. I think they let people go on installment agreements and things like that. It's just one of those things where, if you got this money, you still have it available. Um, you just need to know where you stand with it and then approach the situation having your eyes open. If you got a lot of funding and you don't actually qualify for it, you need to know the full ramifications of what your options are and what you should be doing, instead of, okay, well, hopefully we'll be fine. I'm just not going to check this out. I'm sure it'll be okay. That's not the attitude you want to take. Like, you want the right answer, because do you really want them coming back and saying, hey, you need to pay all this back, and having that be a surprise, especially if you went with one of these companies that was doing a lot of advertising or taking really aggressive positions. You kind of know, right? Like, it would have felt like a sales process rather than a tax professional doing their due diligence work. If you felt like you were being sold something, like, this is a tax credit. It's either appropriate or it's not.
Right.
It's like if your doctor's trying to sell you prescription medication, something's wrong there. And that's what the process with these tax credits should feel like. It should feel like a doctor diagnosing you rather than you being sold something. And so if that's what the experiences were like, definitely need to look into it further and make sure that you were actually eligible for it if you did it, because
Yeah.
it's going to be bad.
Are you seeing people have resistance from a tax professional standpoint? Tax preparers have resistance to open up the hood and look at this for their clients because, oh, I'm just inviting more scrutiny, just let it lie, leave it alone. Is that something you're bumping into?
Yeah, a lot of it is for the tax professionals. If they didn't do this program at all, a lot of them just don't know the rules of it very well. And so they just feel like, well, I wasn't engaged to do this. This isn't my responsibility. The client went ahead and did this. It's on the client's head. I'm here to do the tax return. I've seen that attitude a lot. And that client is not going to be happy if you haven't approached this conversation with them,
Right.
and they end up having a really bad situation with the IRS, and you saw it. Like, you saw that something could have been off. So I see that level of resistance. It's mostly people just not very familiar with the program, and so they don't really know what to do
Right.
when they see this kind of stuff. And that's why a lot of times I tell people, it's like, I'm here to be the bad guy in a way. And instead of you as the tax pro having to come in and tell the client, like, I don't really know how this program works, but this really doesn't seem right. I think you should pay it back. Instead of that conversation where the client's like, well, I don't know if I'm going to listen to you, sending it to a third party person like myself or another tax attorneys that
Yeah.
have experience in this, let them be the bad guy, because then it's not going
Mhm.
to put your relationship with the client on the chopping block the same way.
Right.
So I think that approach has been good too, but it's just one of those things where for a lot of businesses, the money's already gone. And so they're
Exactly.
just really reluctant to look back into it again, but you're
Right.
playing with fire with the IRS.
Yeah, it's not, obviously maybe no easy answers here, but to
Yeah.
ignore it is certainly not the right path. And just in terms of, again, trying to encourage people listening to this that might feel a little resistant. Again, we're doing this podcast in May. You might be listening to this later on in the year, which is great. But we're just leaving tax season and it's like, oh my God, okay, maybe I didn't ask these questions. Maybe I didn't address this with my clients from January to April as we were filing and getting paperwork done. Maybe I missed this. Let's talk about, again, a little bit more your approach to the tax professional, your engagement with them, but then also like in terms of fees, the
Mhm.
fees that you're going to bill out on your end, that is a drastic, let's say a fraction of the cost of what these people are going to pay if they leave it in place. Is that
Yeah.
fair to say? Yeah,
Yeah.
obviously.
Yeah. Yeah. And it's one of those things where when I've mapped this out on the potential gain loss of this, The fees are pretty inconsequential on our side just because you're really
Mhm.
playing with fire. And if you have a claim that gets disallowed and you're not expecting that, you're just going to be in a world of hurt compared to if we can salvage some of the claim, great. If we can't salvage it, at least you know, and you can make a plan around it and you can address it now instead of waiting for a couple of years of because interest is going to accrue on that balance due and it's 8% right now. So even just what you save on the interest side usually would pay for us depending on the size. You're going to accrue interest, you're going to accrue under potentially underpayment penalties and those sorts of things. And then also you could potentially get whipsawed on the income tax piece of it because if you go and file those amended income tax returns and you have to pick up the credit as income effectively and paid income tax on it, you can then get in a situation where the IRS disallows the credit, but you're out of statute to amend that return again. And so you lost that income tax that you paid on it. Between those factors, it ends up being you get a pretty good return on investment for getting it corrected now instead of waiting later. I had a joke with another attorney I was talking to recently where I said, it's kind of like when you go to the dentist and they tell you you can get a crown or you can wait and then it's going to be a root canal and a crown. Which one do you want to do? Because it's going to be one of them. And I think with some of these bad ERC claims, that's kind of the situation people are in. It's like you can fix it now while it's a cavity, while it's a smaller problem, or you can wait until this blows up into a full IRS inspection and you're having to pay for tax attorneys and it ends up being a really painful experience versus just getting it fixed on the front end.
I've tried to highlight those last few questions just to make sure the pain of not moving on this is really clear. So obviously there's a lot of value. There's a lot of positive of like, hey, lots of positive spin you can give to your clients. You don't have to sell this with fear. You don't have to pitch this or position this with fear. I think a healthy amount of fear and sobriety, if you've got clients that you haven't approached this with, is definitely warranted. But
Mhm.
nonetheless, it is just, yeah, I never have had a root canal. I don't want to have one. I'd probably just ask the dentist to just rip my tooth out. I don't need that one. I've got others. It'll be fine. But yeah, we don't want to just prolong and kick down the road pain and stuff that our clients need our help with. And so it is a little scary. It is definitely one more thing of many things that everyone's trying to keep track of in this present moment, and it's easily missed. It's
Mhm.
easily missed. But this is something that is coming that is just going to, again, kind of rage through the system as they're now staffed up and ready to go. So, man, I'm compelled. I'm in. What have we not addressed about this program, about what you do, about what a tax professional should kind of have in their mind? What have we missed in our chat today, Catherine?
I think maybe just talking through a couple of general updates of what's going on with the IRS, just because I think for a lot of people, unless you deal in this program a lot, you might not be aware. A lot of people may have had clients that did filings for this back in the summer of last year and are
Yep.
still like, where are these funds? Like these clients obviously qualified. We
Right.
did the filings. Why isn't the IRS paying these out? Because the IRS did start a processing moratorium in September. It's been my experience and the experience of many others in the field that they've basically stopped processing all returns, period. And so if you have people that filed before the moratorium, they're effectively kind of stuck in the moratorium. So that's normal. And I think it's something normal to communicate back to clients who are like, what's going on? What can I do? If you have people where they did these filings and they need to be corrected or withdrawn, the withdrawal program is still open with the IRS. And the flip side is if you have people where they did these filings and totally legitimate claims, but they're experiencing financial hardship due to the moratorium, you can contact the taxpayer advocate, which if you can just Google that taxpayer advocate file for requests for help. And they are starting, hopefully they're going to continue to take these cases for financial hardship. So if you have a client who's a restaurant who is barely hanging on and this money really would keep them from going out of business, you can file with the taxpayer advocate and request relief.
Mm.
So that's an option for you as well. And then in terms of when do we think the moratorium is going to end, there's no official word yet, which is really frustrating. Even most recently, when the commissioner was being interviewed, there's no timeline of when that's going to restart again. And so anybody who's continuing to do submittals, you're just going to be in for an extremely long wait. It's also an extremely long wait to try to get things corrected. So we have things where I filed corrected amended payroll tax returns months and months and months ago, and they go in the same pile as original claims. And so they're not processed yet on the IRS side. So it can turn into a multi-year process to get these things corrected at the IRS just because they are so behind and they're so inactive. So it's a very long waiting game right now for everybody in the tax profession with this program.
Better to start early than to continue to wait though, right? At least get it in queue. Probably
Oh
the
yeah, absolutely. Because once it's in the mail, it's considered filed, even though the IRS hasn't processed it yet or put it on your transcript. Once it's in the mail, that's going to stop the clock on them accruing these things. As long as, if you're making a payment at the same time with the electronic filing system, you make that payment, you put that return in the mail, that stops the timer on accruing interest and penalties for an overstated claim that needs to be corrected. So that's why you want to get it corrected. It's going to go in a paper stack over at the IRS for who knows how long. And you can call and try to get updates, but they're kind of shut down over there right now. So
Yep.
hard to make progress.
Yep. No, absolutely. And correct me if I'm wrong, because I haven't seen the most recent update, but I know there's a lot of fear about them increasing their hiring and bringing on a lot of new agents.
Mhm.
Feel like what I've been seeing is that that's a little behind schedule. Is that what you're seeing as well?
Yeah, it's very behind schedule. Most recently, they've hired up a number of attorneys into their chief counsel office, and when they're doing these audits, what more and more people that I talk to have been experiencing is you'll have an agent who's kind of running the field audit, but then they're going back to chief counsel for everything. And so the
Got it.
field agent's not super up on how the program actually works and discerning what's going on, but then chief counsel gets pulled in to advise the agent on how to run the audit and what needs to be inspected. So that's the tone of what's going on. So it's getting better. Part of it is the program has some nuance to it. And for a lot of these newer people over at the IRS, it's a lot. It's a lot to learn how to do this thing correctly. So
Yes.
that's what we've been experiencing.
What a time to become an IRS agent and just get dunked into.
Gosh,
My goodness.
I have to say, like talking to the IRS, because I deal with them a lot, I really respect the people on the front lines dealing with this, because I think as a tax professional and then on the IRS side, at the end of the day, we're all trying to achieve the same thing, which is a fair administration of the tax code. And we're all victims of the same problems and victims of the same big bureaucracy issues that are going on. And so most of my experiences with the IRS have been very positive. It's just we have some really big systemic issues in how this is administrated. And then I think just in general, how the US tax system works. Having everything run on a voluntary system just allows for a lot of issues. And this program has really highlighted that.
Mm. Let me ask you a curveball question. If
Sure.
we put you in charge, how would you change or adjust or fix it? What would you change about
How would
it?
oh gosh, I already know the answer off the top of my head.
Let's
So the
go. I
first
thought
thing
you
I would
might.
do, the first thing I would do
Yeah.
is they need to create a online little portal information system for
Okay.
people who did filings, for people who are waiting for their filings to be processed, for the practitioner to go back in and give them more information, to
Mm.
tell them how the client qualified, if it was gross receipts, plugging in the gross receipts numbers that were used, which show the qualification. If it was government orders, listing what the government order was in the effective time, having more information so that they can then utilize software to do these audit selections and say, okay,
Mm.
restaurant in Massachusetts who had a bunch of gross receipts declines and had a bunch of government restrictions, you're most likely a good candidate for this credit, and we're not
Sure.
going to bother you.
Right.
Versus law firm in Florida where revenues were up and up and up and you had no restrictions, you were not a good candidate to do this program, and you
Right.
really should. This needs to be corrected. So that would be the first piece, is I would do that. And then on the IRS side, I would really lean on trying to get the tax profession to assist with this process. I'm surprised with their voluntary disclosure program and the withdrawal program. It is over $1 billion is what they were able to bring back, but they've already paid out $230 billion. So that's like a less than a 1% fraud, erroneous claim rate. And I think that's understated. I think that needs to be, there needs to be more education on the tax professional side to give tax professionals tools to fix this quickly in
Right.
terms of bad claims that happened, but then also on the side of, you have a lot of businesses who have done filings since the moratorium and since last summer who are eligible for this program. And so getting some kind of mechanism so that the IRS can have more information so they can process the returns. That would be the first things that I would do, is they just need to have a little online portal where you go in, put the EIN, answer a couple questions, and then they can see, okay, obviously this was a legitimate claim. We're just going to process it and pay it out. And two, and having the tax professionals' information and their PTIN and their CAF number or whatever they want to have for it, tracking that information too, because then they'll be able to aggregate like who's involved in this space and who's doing work. And it makes it easier for them to go back to practitioners that were active in this space and vet who are the good guys versus the bad guys, because there's only so many people that are doing this kind of work. So that's what I would do if I were them.
Okay. Well, I don't know who's listening to this, but if you're looking for a strategist on making this program more efficient.
Or if you're the IRS and you want to hear more, please call me. I'm happy to talk all day long about this.
That's right. That's right. Oh, well, this was so fun. Catherine, I really appreciate you taking space to share your expertise with us. You are a subject matter expert in this area. And I don't know if there's many others with you right now. I'm sure there are, but we really appreciate you doing this because this is greatly needed for our space, both for our clients to hear this, for other people that are going to listen to this, whether it's through YouTube or a podcast channel. If you're listening to this at the end of the year and you're running into problems, Catherine is a resource that we would really encourage you to reach out to, follow up with. And Catherine, just as a final kind of sign off here, your website would probably be the main thing you'd want to drive people to if they're curious to chat with you more about this. Is that fair?
Yeah, website, or you can always connect with me on LinkedIn because I post regular updates around what's going on as we get things from the IRS. But if you have a client situation or just general questions, feel welcome to approach us through the website and we can schedule some time to talk.
DominionES.com, and then we'll post the site, LinkedIn, and her email in the show notes here. But yeah, this was a really, really great interview, Catherine. Tons of value, tons of really practical things that I think we might need to do a follow-up, maybe 6 months, see what's going on, get some updates. Love to hear from you. Absolutely, if you're up for it.
Yeah, thank you so much. No, I always enjoy talking about this, and hopefully 6 months from now, we'll have a lot more resolution around certain things in the program. So it'd be great to do an update and see where we are at the end of the summer.
Okay. Well, again, everyone who joined us for this chat, thanks for joining. TaxProMarketer.com. We've got other podcast interviews up. Catherine's will be up there soon. Come back and look for new experts that we're bringing on to talk about some of these various things, just to add value, help you guys improve your practices, improve your firms. And we look forward to talking to you guys again sometime soon. So until next time, see you guys later.